Welcome back. You're still with us on Startup Street. Millet-based snack brand Troo Good has raised $9 million in a fresh funding round. The round was led by Puro Wellness with continued support from existing investors like Oaks Asset Management and V Ocean Investments. Now, this latest capital injection will be used to expand its infrastructure, enhance its distribution network, and fuel innovation in its product offerings. Joining me now to discuss this further is Raju Bhupati, the founder and CEO of Troo Good. Raju, thank you so much for taking time out and being here with us on Startup Street again. You know, it's been a long journey for you from leaving your job in the US to come down to India and start, this company. Your mission has always been to bring the nutritional power of millets to the forefront of the snacking industry, right? So your range of products include chickies, protein bars, and nutri bars. If you could take us through the kind of demand you've seen since inception, and where will your next leg of growth sort of come from?
Thanks for having me here. Thank you very much. And we already spoke before. Just to give you context, we started with probably about a ton or 2 tons of products, selling those products in a month. To right now selling almost about 2.5 million to 3 million products per day. So which essentially mean what kind of exponential growth we have been consistently witnessing. So in the same category, I'm talking about just chicky and then bars space alone. I think we are one of the very rare brands to continue to focus on the same product category and then continue to expand. So that really enhances our confidence about that single product and the category. So therefore, we are continuing to put our efforts and expanding our infrastructure and as well as the distribution network.
Absolutely. And you've raised this $9 million from a clutch of investors. Like you just said, scaling your infrastructure is super important. Product development is your key focus area as well, right? If you could take us through where, these funds will go, the key areas in which the funds will go.
So we're looking at, especially thanks for Puro Wellness, Ruchir Modi, and then as well as Oaks Asset Management plus the V Ocean. Their continued support, asserts their confidence about the category alone, category as such. So we are looking at, allocating these funds in 2 to 3 ways. One is perhaps your, capital expansion. We are continuing to upgrade our infrastructure. Right now, we have around 6 factories all over India. And then we may be looking at setting up a very large-scale factory, sort of caters to, pan-India expansion that we are inevitably focusing on right now. And the second is working capital as we keep growing backward and forward, where we definitely have to have some allocation towards the working capital. And the major thing that we are looking at right now, betting very high on the advertisement. So far, we have not spent any dollars on the advertising, and this is the first time a chicky brand is coming out very big on the TV space. Right. So we're very excited, that the Troo Good is going to be really revolutionizing the particular marketing space. So this is how we are looking at allocating the funds.
So putting funds behind marketing as well at this point. But, if you could tell us what lies beyond chickies, protein bars and nutri bars for you. Are you looking to add to this product mix at this point?
So when your flagship product is continuing to expand, continuing to sell, like in the volumes, in the millions and billions. So we don't want to really digress too much into other adjacent categories, though those are similar products, but chicky remains our, absolute steadfast focus. And where we are right now launching a little bit of nutri bar and then the protein bar space, but the space itself is sort of oversaturated right now. Protein bar, still India is not there yet in terms of mass consumption. The Troo Good is always, poised for mass consumption. So as you really look at our volumes, 2-3 million chickies per day is a humongous volume. So therefore, when we want to spill into the other categories, that will be very difficult for us to, deviate our focus and then, keep developing those products. So we would like to remain in the chicky category and maybe develop a little bit of adjacent products. Nutri-bars is something that we are going to be betting on in the next few years.
So Nutri-bar is what you're going to bet on in the next few years. But chickies, if they're selling in the millions and billions, why digress at this point? So, since you're selling in the millions and billions, if you could tell us where your current revenues are at and, what's the profit that you're clocking annually?
So we have been consistently growing probably 50% year on year, and then while remain very profitable. From the day one of this company, we are while we are focusing on growing at an aggressive pace on the revenue side, we are also very, very focused on the bottom line as well. So we never lost, other than barring those 1 to 2 years of COVID, we never lost money at all. At the PAT level and EBITDA level, we are always positive. And on the revenue side, last year we clocked around 80 CR, and then this year we are looking at around 150 CR, probably seeing around 80 to 90% growth.
80 to 90% growth, 150 CR. So lots of big numbers there. Raju, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on your chicky journey going forward.
Thank you so much.
Okay, on that note, we're going to wrap up this edition of Startup Street. Thanks very much for watching from Shruti, Arundathi and me. But stay with us. More news and updates will come up on the other side.